Hi, good morning. This is Leah. Welcome to Hyperwave here with Tyler Jenks and a bit of a fun title. The trend is your friend. So we're going to discuss from the micro perspective. We usually discuss from the macro perspective and just understanding what the trends lines are and ensuring that you're not trying to fight against them. So Tyler?
Yeah, I think that's a good way to put it, Leah. You don't want to fight the trend. The trend is your friend, which sounds simplistic, but it's the single most powerful concept that I think an investor needs to understand. It's different than a contrarian view. Leah's been talking about George Soros entering the crypto space. And he wrote a wonderful book called Reflexivity that is the opposite of what I'm talking about today. Reflexivity means doing just the opposite, that when a trend has been in place for a period of time, you start looking to go the other way. And he does it very, very well sometimes. And he does it very, very poorly other times, as do we all. But just in general principles, you want to be going with the trend, looking for places where the trend is going to change. So this is going to be very short today. I promised Leah we'd keep it at 15 minutes. Let's see if we can do that. We're going to just look at maybe a no, we're going to look at more than that. We're going to probably look at 10 or 12 charts very, very quickly. And I want you to answer the question, what is the trend in each one of these? So first of all, let me pull up a couple of things. And let's start with our friend, Bitcoin. You're looking at a long-term picture of Bitcoin. You see two trends, all kinds of mini trends and sub-trends and counter trends, but there's only two trends here. The first starts on the left side of the chart and goes up to the peak. That is an uptrend. You want to be in that asset. The next trend you see is a downtrend. You do not want to be in that asset. Regardless of all the other stuff we've talked about in terms of the micro trends, the counter trends, the resistance, what you want to do is get the big picture and make sure you are going in the direction of the big picture. We've been saying for 4.5 months now, maybe closer to 5. Well, December, January, February, March, April, let's call it 4 months in a downtrend. So that's the way you need to be positioned. Yes, we are looking for the trend to end at some point and start a new trend, at which point you're going to be interested again in that asset class. But you don't want to fight it. Let the trend come to you, understand what it is, and then move on accordingly. We showed you this chart. This is silver, going all the way back to 1981, which was the beginning of a downtrend after a 10-year uptrend off the chart on the left. Then you saw a period going from basically 1991 until 2003. There was no trend at all. It was flat. Starting in 2003, there was another trend all the way up to the old highs, and now we have been in a downtrend. We're talking major trends here. We're not talking all of the minor variations. Here is a picture of gold. This is from the peak at $880 back in 1979, And it is also the 7th phase of a hyperwave. And the trend was down from the left-hand portion of the chart until 1985, and then began an uptrend, and then began a downtrend until 1990. You're just looking at the major movements. This is the NASDAQ. It had been in an uptrend since 1992 on the left-hand side of the chart, all the way to the peak at 2000. You wanted to be in that trend. And that's regardless of hyperwave. That's regardless of the sequential trading system. That's regardless of trend lines. That's regardless of consensio and moving averages. It's simply the trend, and the way you see the trend is looking backwards, not looking forwards. You cannot tell what the future is going to hold, but you know what the past has been giving you. And as long as the trend of the past is intact, that's where you want to be. Now, in 2000, if you knew hyperwave at the time, you would recognize that as a trend change from up to down. And you would also recognize that this movement from down to up is a false trend, because you would have known it as a phase 6, which was going to reverse into a phase 7, which it did. So you could either try to play the phase 6, which is going against the trend, which means you are going against your friend and you are siding with your enemies. But if you know what a phase 6 looks like, you can play that. But you should not have been in any of these NASDAQ stocks over the next 4 years, period, because the trend was clearly down. Now what I'd like to do is go through a bunch of charts very quickly, because these are all very long-term charts. And we're going to start with the stock market over the last 100 years. This is why you want to be in stocks most of the time, because you go from the far left to the upper right, lower left, upper right. The trend has always been up. There are periods of times that the trend will go the other way, either down or sideways, but it always returns to the upside. That's why stocks are the #1 investment for large institutions, and it should be for your retirement accounts also. This is the Dow Jones Transportation Average, the same thing. The Dow Jones Utility Average, the same thing. These are large cap stocks going all the way back to the mid-1920s. This is the New York Stock Exchange Composite. This is the NASDAQ. This is gold going all the way back to 1970. It is marked by this very long period that was predicted by Hyperwave that lasted almost 20 years. And during that period of time, gold bugs kept saying, buy gold, buy gold, buy gold, and you lost a generation of your wealth. Not that it went down, but that you were not participating in the trending markets that you should have been in. That ended here at the beginning of 2001, 2, and 3, and is still intact as an uptrend, although for the last 5 years you couldn't have made any money. Once again, there are ways that you can evaluate those sort of movements. All these other technical tools. This is silver. Big uptrends, big downtrends, big uptrends. We will see where this goes, and that depends on a lot of macro factors. This is crude oil. Now, in terms of currencies, this is the US dollar. And you can see that it has been in a basic downtrend since the early 1980s, moved on a couple of occasions by uptrends and downtrends again, but the overall picture has been down. The British pound can't make up its mind. The Japanese yen has been in an uptrend, as Leah talked about in our macro discussion, for a number of political and economic reasons, and also financial reasons having to do with them artificially keeping their rates low. Canadian dollar, the euro. The euro basically is lower than where it started when the euro went into existence. We've looked at this chart over and over again. There's only two trends over 80 years. The uptrend in yields in the United States and the downtrend to today. We are still in a downtrend regardless of all of the talk about higher interest rates. Treasury notes, treasury bills, the prime rate. This is an interesting chart because this is economic. This is the unemployment rate since World War II in the United States. There are no trends there other than very short-term but powerful movements up and down. And those are economic cycles. And we are going to do a whole show on cycles. We have not talked about it, and almost no one today talks about it, but it's one of the most powerful things you need to know in determining the possibility of a trend change. This is non-farm employment in the United States. Been in an uptrend forever and is still in an uptrend. This is the one that everybody has to understand if you want to understand cryptocurrencies. This is inflation. This is the consumer price index since World War II. World War II, it does not go down. It only goes up. And that means the value of the dollar only goes down. We looked at a dollar chart, but we are here looking at the price of goods. And therefore, the inverse of the price of goods is the value of the dollar. When you look at a dollar chart, that's against all other currencies. When you look at a chart of the consumer price index, that is against all the things you have to buy and want to buy. And as long as this line is going up, your dollar, your spending, the value of your investments is going down unless you can keep up with that line. These are housing starts. Yes.
Just adding to that, not too long ago, it's not right there. I did a lot of calculations because it's not listed on the velocity of money, and it is and has been, as you very well know, just an insane increase. So just adding to that one chart, I just find it really interesting.
That chart that we looked at, this one, indicates that the value of the dollar relative to goods and services has dropped 97% since the Federal Reserve came into existence in 1912. In other words, you've only got 3 cents of every dollar you had when the Federal Reserve started. Enough said about that. Producer price indexes. These are the commodities and the prices of goods at the producer level. Same thing. Okay. Enough of all of that. My point is and has been on today's vlog that you start at the top, the macro level. you look at the major trends of each individual asset class. You don't fight those trends. When they are in your favor, if you are long and you own it, you stay with it. When they are in your favor and you are short and it is going down, you stay with it. The only time you have to make a decision about investments, about asset classes, about Bitcoin versus cryptocurrencies is where you see a trend changing from up to down or down to up. And then you don't fight it. You don't hodl it. You don't hold on for dear life as your investment drops and drops and drops in value, because you have violated this very simple principle. The trend is your friend. Don't fight it. All of the tools that we're talking about, Hyperwave, sequential trading, Elliott wave, Consensio, broadening tops and broadening bottoms, cups and handles, all of those are ways to get an indication of what the trend is doing at this moment. And you can act on those, but don't go against the major trend. And that is the story for today. And we will take the next part of those aphorisms. Don't tell me what to buy, which of the asset classes you believe is good. Tell me when to buy it. Tell me when the trend is in my favor, and then I will look at it. And we will do a whole show on that. And with that, back to Leah.
All right, everybody. Thanks for watching. And I guess that's it for today. Looking forward to seeing your analysis and hope that all of this makes sense. And if you have any questions, obviously we're here. So have a good one.
Great. Thank you very much.